How does FTX proposed sale to Binance impact Washington? Joining us now to discuss is Kristin Smith, Executive Director at the Blockchain Association, a crypto lobbying organization. Welcome, Kristin. You're here on a very big day, so much going on. Originally, we were going to focus only on the elections. Obviously, there's some other news in the room right now. First question is sort of a two-part question here is, do you think that this is going to draw the attention of U.S. regulators, just kind of all this chaos in the market? And I guess, but the real question is like, what is the regulation that would prevent something like this going forward, right? Like, I mean, U.S. regulators might say like, okay, this shows that we need to act, but like, what would you actually do to prevent this kind of thing going forward? I feel like some people are already insinuating that there's measures that can be taken, but like, what would they be in this case?
Yeah, no, those are both great questions. And yeah, certainly between the news with FTX and Binance yesterday and the US election, it's been an incredibly crazy time here in Washington. But listen, I would say it's important to remember that Binance US and FTX US are not part of this deal. So US retail customers should not, at least at this stage, be caught up in the deal that is being negotiated. That being said, I think lawmakers are very much paying attention to this. One, because it's major national global business headline, but two, because Sam has spent a lot of time in Washington and does personally know a lot of the policymakers. And so I think it's going to invite a lot of scrutiny into how centralized exchanges should be regulated. It's interesting because what happened with FTX may not be able to be addressed by US regulation, but I do know that Congress is very interested, as we've seen through this past year, in finding a way to regulate the spot markets and having exchanges register probably with the CFTC, potentially the SEC. And I think there is, as part of that, you could have some sort of proof of reserves and some guidelines around what you're supposed to do with customer deposits. I think there is an expectation with crypto customers, when they're keeping their crypto on exchange, that is not being taken and lent out and doing something else like it would be with a bank. And so I think this is going to open up a more robust debate around exchange regulation. And I think that, this is going to be a top priority for the new Congress when they're sworn in January.
So if FTX and Alameda had actually been based in the U.S., if these were actually U.S. entities, would the current state of U.S. regulation have prevented this from happening? Or prevented, I guess, Alameda from having this kind of balance?
Question, right? I mean, you have to have, money transmitter licenses in order to operate an exchange in the United States. I think there is, the potential for, I think there's questions here. Let's be honest. Like, what was there fraud going on, right? I mean, what were the contractual terms when somebody, deposits at FTX US? I think there are a lot of outstanding questions that some U.S. laws would cover. I think, it'll be interesting to see what the international regulatory response is to this effort. But no, I think, listen, going forward, this is going to be a very big issue and one that I think is going to draw the attention of Congress right out of the gate in January.
Yeah, I feel like one of the main questions for me here is that, CoinDesk obviously sort of played a role in the story because our colleague Ian Allison was the one who reported on this kind of shady Alameda balance sheet. But I guess the question for me, and this is the regulatory question, is like, had Ian not seen that document, like, would we just not have known? I mean, and that's what I mean about regulation. Is there some sort of regulation that would have required that kind of disclosure? I mean, is that part of the problem? I mean, that seems to me like a core issue here.
Well, I think you make an excellent point. What brought the shortcomings of FTX to light was not any sort of regulatory disclosure. It was two things. It was journalism, and it was the savviness of the crypto community that were going on, looking at the blockchain, trying to figure out where funds were, where they were going, and the analysis that the community shared helped to tell the story based off of what started as a CoinDesk article. I mean, what's interesting is there is almost this sort of self-regulation going on where, the community cares very much about the integrity of what people are saying. And I think that there are a lot of good actors. I think transparency transparency and openness is a value that most of us who are working in the industry hold, and that we're actually very, very well able to sort of police ourselves. I think if you look back to, Terra Luna and Celsius and others, it was a similar situation. This wasn't a regulatory action where regulators step in. Regulators can't move fast enough to keep up with these sorts of things. And so, I do think that we will see regulation, right? Everyone has said for a while now that we need to do something with the spot markets. This is going to focus the attention on that. And yes, I think having disclosures and attestations that the reserves are there are going to be important, but there can be shortcomans with those audits as well. So I really think it's the sleuths within the crypto industry that are the most important piece of keeping these actors honest.
Except we've known for a long time that the way Alameda, it's called Alameda Research because they couldn't get banking as Alameda Trading. I mean, and Sam Bankman-Fried has openly said that. It's nothing anybody, it hasn't been a secret as to how he got his bank accounts to begin with. And there have been grumblings for a long time about what was backing the value or how did FTX get all that money. And people had for a long time questioned that. The fact that Ian Allison found it was terrific, and it was great journalism. But nonetheless, for a long time, there have been questions about why Alameda was so tied to FTX and how that was allowed to happen when we have in the United States regulations that keep we no longer have these banks holding prop trading desks for a reason. We had a major financial catastrophe years ago, and it freaked out everybody. Do you think that maybe this is now the time, you mentioned maybe registering with either the SEC or CFTC. Tim Massad, who used to run the CFTC, suggested an SRO, a self-regulatory organization that would police, if you will, exchanges in the United States, that maybe it's time for that to happen, and included with it, perhaps not allow foreign entities to own U.S. operated exchanges at all, and to have no connection. Do you think that that's something that we should see?
Yeah, no, the self-regulatory organization question is an interesting one. To have a proper SRO, you actually need an act of Congress, and you need a regulator to designate an SRO. So it's not like the industry can just say, hey, let's have an SRO and that'll solve our problem.
No, but is that something you guys are pushing?
We are pushing right now for a federal regulator of centralized exchanges. There are a couple of bills that have proposed this. One of them is the Digital Commodity Exchange Act that which likely will be introduced by who is likely the next chair of the House Agriculture Committee. There's also the Responsible Financial Innovation Act that Lummis and Gillibrand have introduced. Even the Digital Commodities Consumer Protection Act gets at this issue. Now that bill has problems because it also goes so far as to capture DeFi, which clearly needs to be a separate conversation because the risks there are very different than in the centralized context. But there are proposals out there. We have spent time at Blockchain Association figuring out what would be the best way to do it. At the CFTC, we actually have ideas on how it could be done at the SEC. And so we think that it's an important piece to get the regulation around centralized exchanges right, because it will protect consumers and it will provide more confidence in the marketplaces so that institutional investors and others will feel comfort about investing in this space.
Should non-regulated foreign entities own U.S. exchanges? For instance, we have non-U.S. exchanges owning, let's say, equities exchanges in the United States, but they're regulated by countries that we generally know what their regulation system is. We don't know where Binance is even located. That God knows it's sometimes it's here, sometimes it's there. It's wherever CZ happens to be. FTX was in the Bahamas. Before then, they were in Asia. It doesn't seem like that these organizations that own, let's say, FTX US or Binance.com, and we can make this view that, oh, well, they're totally separate. It's just licensing the name. But at the end of the day, we know damn well that Binance is owned by Binance, that Binance US is owned by Binance. Let's stop the charade. So why should that continue? Should that nonsense continue? Or should US regulators say, you know what, that's enough? We have to know who owns it, where they're located, and are they regulated themselves? Otherwise, forget it, no deal. You can't operate in the US. You can't take US customers' money.
Yeah, no, I think it's a very interesting question. It's not one that we've discussed much with the membership of Blockchain Association. I mean, my understanding of both FTX US and Binance US, which, by the way, are not members of the Blockchain Association, my understanding is they are actually distinct entities and they have common ownership interest. And so I think it would be an interesting challenge for regulators to figure out, what is appropriate for foreign entities to invest in or not. I think it's certainly a conversation worth having. But I also think, listen, these are global marketplaces. And, by locking foreign investors out of coming into the US market doesn't mean you're not going to have those unregulated pieces that are overseas. And so I think that what we need to figure out is, can the US step up and show leadership, come up with the proper way to do this regulation, and then export those ideas around the world? Because right now, it doesn't matter where the headquarters of the company is. It's not where the headquarters, it's not the headquarters that dictate the jurisdiction. No, it's in the jurisdiction where there are customers. So if you are operating in the US, you currently have to comply with all the regulatory requirements in the US, like, registering with FinCEN as a money services business, getting state money transmitter licenses, or you can't operate here. And so, I think we need to focus on what Congress can do, and, try to show some global leadership and export our ideas about how best to do regulation to the rest of the globe.
Kristin, let's pivot a bit. So we just had these U.S. midterm elections come by. We know that Sam Bankman-Fried was one of the country's largest individual donors, according to OpenSecrets.org. He had a very strong presence in D.C. There we have it. Second largest Democratic donor, 6th overall in the top 10. So we previously spoke to Congressman Jim Hines. He said that, Sam played a big role in educating lawmakers on all things crypto. Now, in the crypto industry, at least, he's been quite vocal. And among critics, he has kind of exposed himself in saying, a lot of crypto exchanges are probably already insolvent, perhaps a Freudian slip, and saying that DeFi is basically a Ponzi scheme, or at least describing it as such in a Bloomberg interview. And now we see this happen, and a lot of the money that he was donating to politicians was backed by, I suppose, FTT token, and the value as that, was overblown, if you will, according to critics. And so how does that reflect upon SBF and the crypto industry at large?
Well, listen, it's important to remember Sam is not the only one working on policy in Washington, D.C. I've been at the Blockchain Association for over 4 years now, and we have done a tremendous amount of work to educate policymakers. We have a team of 17 people here working on that. There are other organizations, too. There's the DeFi Education Fund. There's our friends at Coin Center that look at this from an independent perspective. There's our friends at the Crypto Council for Innovation who are growing their team here in Washington and doing good work. And so I think the work of educating policymakers will continue. It's happened long before Sam showed up, and it'll happen long after, he's gone. I don't anticipate he's going to be spending much time on Capitol Hill. I think he has far bigger problems to deal with at the moment. He obviously has to cut a deal with CZ and protect his customers and figure out a path forward. But yeah, I think it's a setback to have somebody who is so well known be caught up in a situation like this. But, the reality is there are a lot of good people who are building great products and services on top of blockchains here in the United States. And I think that we want to focus on telling those stories and paving the way for those innovators that are really trying to do good for the world to be able to do so, because I think there's a lot of potential here. We've got our work cut out for us to go and explain that to policymakers in the weeks and months ahead, but there's a lot of infrastructure here on the ground, and I'm confident that we will be able to survive this.
Backfiring on him ultimately, since he's been so publicly exposed to DC, and now he's had this mix-up. But I want to also bring up crypto exchange Binance CEO Changpeng Zhao. CZ is urging industry players to provide proof of reserves following yesterday's events involving FTX and Binance. And do you think that is a possible remedy to the issues we're seeing right now among these centralized exchanges?
Yeah, no, listen, I think proof of reserves are a good idea. I think we've already seen Coinbase and Kraken have regular practices of doing that. I think that is, the transparency that comes with that is very important. Remember, in crypto, it's really like not your keys, not your crypto. And if you're trusting an exchange, you want to know that they are holding it on your behalf. And so yes, I think, CZ is right on there, but it's nothing that U.S. exchanges, at least the major ones, aren't already doing.